Robert, I'm so glad to have this time to sit down with you today to talk about LumaTax and how firms can incorporate sales and use tax into their service lines.
Thanks for having me, Valerie.
Before we get into that, I'd love to hear a little bit more about the history of LumaTax.
So LumaTax fundamentally stems from my belief that the accounting profession in general is going to undergo a foundational transformation over the course of the next 5 years that will introduce much more technology into the practice, and that will shift primarily from the days of telling our clients what they did to telling our clients what to do. And that'll be based on machine learning, artificial intelligence, cloud computing facilities, but it's a secular trend and it's a secular shift that accounting firms will have to adopt over the course of the next 3 to 5 years. Building upon that, I define sales and use tax in two ways, the advisory capacity and the operating capacity. And for the last 20 years, we've seen a lot of advent of technology in the operating capacity. And what I mean by that is those things that have to occur during a shopping cart experience or a transaction experience, the sales transaction, the purchase transaction, those have to occur in real time at the time of the transaction. There's no opportunity for a CFO or an accounting person in a corporate environment to call their accountant and ask for advice. Sure. So that's tax rates, tax rate updates, product taxability, tax calculation, exemption certificate management. Those things have to occur, and that is what I call the operating aspects of sales and use tax. But prior to that, there's a whole series of episodic advisory services that have to occur so that you can set yourself up for that real-time reporting. And that includes Nexus, the Nexus survey, Nexus analysis reporting, both physical and economic Nexus, and then the result of that will be a registration, and you'll register either timely or untimely, possibly use the voluntary disclosure tool. Once you have those sort of identified, the registrations, the jurisdictions you're going to be in, then there's a whole set of other things that occur, like product taxability. You have to identify all the products, the bundles, the way you ship them, and how they're taxed in your system. And that's a whole process. After that, we look at other types of engagements where the taxpayer is directed by the accountant so that they can set up their tax technology to effectively do the operating side of compliance. Sure. And so the opportunity for accountants is really to step forward in that advisory capacity, and it's something that I don't think has been done relatively well at firms throughout the U.S., and so I would love to see us play there.
Wonderful. Well, I am excited to dive into each of those topics and talk about how firms can incorporate them. Let's start off with Nexus. So that's a bit of a buzzword. Tell me a bit more about what Nexus is and some of those definitions that you were just throwing out.
Yeah, so Nexus is really an interesting concept and it has a long legal history. And so without getting too detailed into the legal ramifications, there was a major change in 2018 with a Supreme Court decision. But Nexus really is just a connection to a location. That's really, in its simplest form, it just means connection. And so businesses are connected to certain locations, jurisdictions, states, localities, municipalities, all these different things that governments have defined as their own jurisdictions. But that connection is made, and when that connection is made, that requires the company to comply with that jurisdiction's law. So it basically gives the jurisdiction, if you will, the ability to export their law upon you as a company or an organization. And so really Nexus is just the defining of the connection between you and a location.
So that's all changed quite heavily as a result of the Wayfair Supreme Court decision, is that right?
That's correct. So previously, prior to the Wayfair decision, it really required a physical presence. And physical presence is a little bit dicey in the way you define it, but it's not just having a location. It could be having inventory. It could be you have a warehouse. It could be have a remote employee. It could mean you had temporary physical presence in a state doing a trade show or soliciting orders or making sales on a transitory basis. It could also have meant like you had a warranty services company perform warranties for you on your behalf. Any agency relationship. So those were classic physical presence doctrines, and those would require you to report in that jurisdiction. After Wayfair, the Supreme Court ruled that those still hold, which is something that many people have a misconception about. The physical presence rules still hold, but they added one more layer, which is called the economic activity presence. And that's set by each jurisdiction, but it generally refers to some level of economic activity that a company engages in before it can be considered Nexus oriented in that jurisdiction. So that's what Wayfair presently means to most companies.
So it's gotten pretty complicated. How has that affected the SALT practices and the relationships with their clients?
Yeah, so think about this for a second. You're looking at companies that used to have jurisdiction in one taxing location. They're domiciled in California. They only had one requirement. And they're shipping all over the country. And just based on the population demographics of the U.S., of where things are purchased and sales tax collections, if you now have $10 million in sales, you're probably doing business economically in a multitude of jurisdictions. I'd say probably between 16 and 20. So your footprint for compliance has gone from one state to maybe 10, 15, 20. So when you think about it like that, that increases the level of compliance for the operating company, which means if they don't have that expertise, they're going to reach out to their accountant. If the accountant doesn't have that expertise, they're going to need to either develop that expertise or they're going to have to send that to a specialist, which is never an ideal situation to send your client elsewhere for services.
Absolutely. And I imagine that the increase in e-commerce and digital natives, there's more and more clients that expect to be serviced in this, right?
Yeah, and frankly, because what's happening is they're getting letters from the government. And the government's saying, hey, do you have Nexus in our jurisdiction? Yeah. But it's not just US-based firms. If you think about it for a minute, how many people are shipping on Amazon? And everybody that's shipping on Amazon, which also has a new definition under the new law, but everybody shipping on that platform is shipping into the United States, gives them economic activity in the United States. It doesn't really matter where they're domiciled now. They could be in Mexico, they could be in the European Union, they could be in Canada. So if you're a global firm with outreach to global companies, every one of your companies that are selling merchandise in an e-commerce platform or any remote sale, that could be catalog sales, any remote sale is exposed to Wayfair.
Wow. That's a lot of clients and a lot of opportunity for firms to broaden their services.